Good morning everybody, and this is your Dow Jones day trade setups for today. So just starting off on the weekly chart, just want to highlight just a few little things here, and the first bit of information we need to pay attention to is this weekly level here of 26,261. You can see how well it's been respected in the past. We didn't really get a test of it with this neckline, and we're busy getting a test at the moment. So just keep that picture in mind. There are obviously other weekly levels that you need to pay attention to, which are just as strong, and that's also going to be in this area here of 25,439. Okay, so pay attention to that. Moving across to daily, we didn't really get a bullish, we didn't get a bullish day at all. There's another red day. The big question at the moment is whether we are going to find support here or whether we are aiming for this double top to play out. I'm going to have to put another level in here. So you can see we've got a weak daily close below this 26,542. The problem is it's not really a big close below it. We are below it at the moment. So we'll have to wait and see. Now, with all the results that came through yesterday, it was kind of a mixed bag. You know, revenue and earnings pretty much green, more green than red across the board, but it's the outlook and the forecasts that are scaring the market. So now Apple shareholders were scared. Twitter was hit and dropped 17%. So there's a lot of chaos that happened after hours, and that's after the market closed, with predominantly with the big tech stocks. So we have to wait and see the open and just see what transpires there. But for me at the moment, this is still a situation of sit on the sidelines. There's nothing really transpiring. Look at the 3 hour here. Big up, big down, big up, big down. This, ladies and gentlemen, is confusion. This is just a pure indication that nobody knows what the hell's going on at the moment. And you can't, unless you're trading on a very small time frame and you picking up the ranges and trading the ranges, that's the only way you're going to be making money out of this at the moment. So I think this is kind of what we should expect going into Tuesday next week. I think Monday should be a pretty quiet day. I don't think anything's going to shock the market at the moment with the politicians and what they've got to say on Twitter. But I think this is going to continue. So with that in mind, I'm just going to put a level on top of these tails, and we've got a level at the bottom of these tails. And then let's get down to some levels that we could possibly trade. So looking at the hour, nice bullish pin bar, and then immediately a reversal, pretty much after the market closed. To put this into context, if you look at the Wall Street where it closed, we can just pick it up quickly. Dow Jones closed 0.5% up, and we are at the moment, we are 0.76% down. Okay, so this fall here was pretty much after hours. So if those stocks open today down at the level that they were falling, Amazon was down, Amazon, Twitter was down, Facebook was down slightly. So, you know, if those stocks continue to fall going into the open, you're more than likely expecting us to get down to 25,439. So just look at the logic here. We've been a downtrend. We've now gone into a range. So a break of the range to the downside is going to be extremely bearish, and you're going to be looking for a move further down. Okay, so that's kind of the play at the moment. I think by the looks of things, bears could still be in control of this. We'll have to wait and see for the open. I'm not going to try guess anything right now, because that's all it's really going to be right now, is a guess. We're going to need volumes to drive this, and you don't have the volumes at the moment. You may have some of the volumes in the European session, but I don't think that's going to transpire. To be honest, I think Europe's also on edge. Okay, so anyway, so there's nothing much at the moment, but if we do start breaking I think I'd even go as far as say this 26,542. If that level, if we stay below the level like we are now, it's a good possibility we're going to fall further. Okay, so that's kind of the only logic I've got at the moment. But when you zoom out onto the higher time frames, you've got little wedge breaks, move the upside, move the downside, and you can see how disjointed this is compared to the trend. So yeah, I think any break the downside is probably well worth chasing short for the next level. And next level for me is pretty much down here, 25,439. Okay, so not a trade that I'll be taking. I don't short this market, so I will probably still be sitting on my hands waiting for structure and basically waiting for Tuesday. I think once the elections are behind us, then there's one less thing to worry about, and then we can start focusing on other things. Okay, anyway guys, not much to help you I'm afraid, but if you are going to be shorting this market, just keep your stops as tight as possible, because it could turn on a dime and really rally to the upside as well. So this range, the longer it goes sideways, the less probability it is of moving to the downside. So anything more than 20 bars, at the moment we're sitting at 35 bars sideways. So more than 20 bars sideways, it can go either way, up or down. Okay, anyway guys, that's it for me. Hope it helps, and we'll catch you later. Cheers for now.